Hi everyone, happy Friday. I wanted to come on here and talk a little bit about a presentation that I attended this week from Dr. Lawrence Yoon, who is the chief economist for NAR. And every year he comes out with a bunch of statistics, and it's very helpful because he breaks things down and gives us actual data. And so I wanted to kind of summarize and go through what 2026 could look like for the housing market. There's been a lot of noise out there. Some people are saying we're headed for a crash. Others are saying we're about to boom again. So instead of the headlines, let's look at the actual data and, more importantly, what it means for us here in Montana, because the last few years have been anything but normal. So this presentation focuses on two big things. One, the housing market itself, and the broader economy driving it. So mortgage rates, job growth, inflation, kind of all of the stuff that moves real estate. So let's take a look here. Let me pull up this slide. So this is talking about existing home sales. So let's rewind a bit and let's go back to 2019, which is the last year that we consider called a normal market. 2020, 2021 were historic frenziness, ultra low rates, bidding wars everywhere. Rates jumped from around 3% to near 8%. And this wasn't a small adjustment, it was a giant shock. And so buyers stepped back because affordability collapsed. Sellers stepped back because they didn't want to give up their 3% mortgage. And so the market didn't really crash, it just kind of froze. We can kind of see that in 23, 24, and 25. Prices stayed high, transactions dropped. And this is kind of another one that just kind of shows us kind of what's been happening. And you can kind of see the dome shapes in there are basically what happens throughout the year. There's always sort of some seasonal interesting changes with the market. So let's take a look at this. So this is kind of something really important that often gets missed. So transactions slowed. Home prices across most states have surged since COVID. Many states saw massive appreciation over the last few years, and it created enormous housing wealth nationwide. This is why you don't really see a 2008 style collapse. Homeowners aren't underwater. They've all built equity. I mean, when you look at this map, it's kind of crazy. We can zoom in on Montana and look at that, 72.8%. Montana saw some of the strongest appreciation in the country since 2020. And this explains why our market has remained relatively resilient, even when nationwide sales have slowed down. So let's take a look at this guy. So this is kind of interesting because it's talking about monthly home sales, and it's been seasonally adjusted. And so let's talk about momentum. So late 2025 data after seasonal adjustments started to show signs of an upturn. It's subtle, it's early, but it may be the beginning of a recovery. And then this shows us a little bit even of a different picture. So this is our upper end market. This is talking $1 million plus homes. And in Montana, that includes a lot of them these days. And so this is one segment that's been moving more than others, the upper end. Part of that is stock market wealth. Part of it is simply appreciation pushing more homes into that bracket. Demand didn't disappear, it shifted. And this one even shows it a little bit more. So we can kind of take a look and see the sales growth rate. And if you'll look, I mean, even in that $5+ million range, we're seeing 17.8%, which is huge. And let's see here. Let's take a look at inventory. So inventory began rising in 2025, which is healthy. That's what we wanted to see happen. But then later on in the year, it kind of stalled. And inventory is kind of the biggest driver behind our market. Without more homes coming to market, even strong demand can't translate into higher transaction volume. And so we're seeing that sort of kind of die down now. It'll be interesting to see what happens as we head further on into the year. This one is a good one. So this shows us days on market and sales to list. And so something I do want to point out with this graph is that NAR defines median days on market a little bit differently than we do in Montana. So This median days on market is from the date that the home was put on the market until the date that a contract was signed. And so in Montana, that's under contract. Most of our median days on market, anytime you see me put up statistics, that is from when the home was listed to when it closed. So this is a little bit different, but like you can see here, we are increasing our median days on market. Homes are sitting a little bit longer. We're seeing more negotiation. If you take a look at that sales to list price ratio, it's ticking down just a little bit. There's no longer bidding wars on things, so we're not back to 2021. It's definitely more of a balanced environment. This graph is kind of a big thing to factor in. So this is new home sales. And we are back to pre-COVID sales. Builders are carrying more inventory. This means incentives. So we're seeing lots of builders out there with, rate buy downs, flexibility. If you're a new buyer, don't ignore new construction. Oftentimes that may be an option for you to get some pretty good deals. Let's take a look at how this is affecting the mortgage rate. So everybody, anytime you have a conversation about the housing market, mortgage rates come up. Here's what most people misunderstand, and I really want to kind of drive this point home. The Federal Reserve cutting rates does not mean that mortgage rates instantly fall. They are not directly correlated. So mortgage rates are influenced by inflation, government debt, global markets, a lot of different moving pieces. But the expectation discussed is that hopefully as we progress throughout this year, that rates could trend, and I'm talking mortgage rates, could trend downward towards 6%. And psychologically, after being in that 7 to 8% world for a few years, 6% sounds pretty darn good to a lot of buyers. Let's take a look at another factor. So this is 1 year payroll job gain. And so the Fed is cutting because job growth has cooled. So a lot of times what the Fed is looking at is the job numbers. And so they're always talking about waiting for the job numbers to come out. And we're not seeing massive job losses, but hiring has slowed. In Montana, we're kind of still in the positive, which is definitely a good thing. This one shows job gains since pre-COVID. So this is where Montana does really stand out. Since pre-COVID, payroll employment in Montana has grown strongly. And this matters. It matters a lot because job growth equals housing demand. People buy homes when they feel secure in their income. So when you combine strong employment levels here with limited inventory, it helps explain why our market has held up. Let's talk about delinquencies, because this is kind of the big thing that everybody's been talking about. So if you look at this, you can kind of take a look and see these are the number of mortgages and foreclosures affecting us. And you can kind of see that giant 09, 10 range there. And then obviously in 2020, we saw a big uptick in people not paying their mortgages because of all of the things going on. But now when you take a look, I mean, we're even back down before we were in like 2000. So we're kind of in that same range. So, when people are saying the market's going to crash, we're going to see this flood of bank-owned properties coming on the market. If we actually look at this data, it just really doesn't line up. Distressed sales are still a very small percentage of the market. Most people are sitting on quite a bit of equity. And so, turning to foreclosure is probably not an option that they're going to go to. Let's look at this. So nationwide forecast. So here is the big headline. This is what everybody's kind of waiting for. And again, this is just one opinion, but I do think that it's kind of an important thing to look at. He is forecasting 14% growth in existing home sales, assuming that mortgage rates move towards 6%. Even with that growth, we'd still be below pre-COVID transaction levels. Prices, they're kind of expected to grow modestly. Nothing major, nothing like the COVID craze, just kind of slowly ticking up there. Not another frenzy, not another crash, just kind of a nice balanced recovery. So what does that mean for us in Montana? If rates ease and inventory increases even slightly, we could see activity pick up. But remember, real estate is local. National headlines don't always reflect what's happening here. and even Montana. I mean, there's definitely different pockets of transactions that are happening differently than other areas. And if you'd like me to break down more specifically what this means for you in your particular situation, please feel free to reach out. I'm always happy to talk about it. Thanks for watching, and I'll catch you on the next one. Thanks for watching. Make sure you click the subscribe button so you don't miss out on any new videos. And if you have a topic you'd like me to cover, drop it in the comments below.